If you've been watching the markets, you've seen the headlines. The US dollar is weakening. Forecasts now predict a drop of nearly 9% by next year. But what does that mean for global investors like you? I'm Yana, luxury real estate investment advisor in Dubai, and today I'll explain how this shift can directly impact your buying power, and why Dubai is becoming a key strategic asset for high net worth investors worldwide. The UAE dirham is pegged to the dollar at a fixed exchange rate, approximately 3.67 AED to 1 USD. A weakening US dollar therefore directly weakens the dirham against other global currencies such as the euro, British pound or Chinese yuan. A weaker dirham makes UAE real estate more affordable for international buyers whose currencies gain strength relative to the dollar and dirham. That means buyers in euros, pounds and yuan now get more value per square foot in Dubai. So if you're buying property in Dubai and you're holding euros or pounds, congratulations, your money goes further. This affordability could attract more buyers from Europe, Asia, or other regions, boosting demand. Increased demand from foreign investors could drive up property prices, particularly in high-demand areas like Dubai and Abu Dhabi, which are already global real estate hubs. Here you get luxury property, full ownership, no income tax, and 6 to 10% rental yield. FX gain 5 to 10% on property purchase. But it's not just about FX gains, it's about where that money goes. Dubai offers world-class real estate with tax-free capital gains. No property or income tax freehold ownership for foreigners, 6 to 10% net rental yields in premium zones. Compare that to London, Paris, or Singapore, where yields are below 3%, taxes are high, and political risks are rising. So you're not just buying cheaper, you're buying into value, liquidity, and long-term growth. Now here's where it gets even more important. Timing. Global construction costs are rising. Steel, glass, logistics. Many of these are priced in euros or yuan. A weaker dollar means higher import costs for developers, which will be reflected in launch prices by 2026. So if you buy now, you're locking in at today's rates before the inflation wave hits the market. Globally, we're seeing capital flight from over-regulated, high-tax jurisdictions. Family offices, crypto investors, and institutional funds are rebalancing portfolios into stable USD-linked markets with investor-friendly regulations. Capital flows to Dubai. Dubai offers 100% repatriation of funds, crypto to property deals, golden visa residency, confidentiality and speed. In uncertain times, investors aren't looking for speculation, they're looking for safety, yield and freedom. Dubai delivers all three. A weakening US dollar could make UAE real estate more attractive to foreign investors, potentially increasing demand and pushing property prices higher, especially in the medium term. This is not about flipping, it's strategic hedging. Global capital is moving out of volatile markets and into dollar-linked tax-free assets. So, what's the real takeaway? A weakening dollar is a signal, and those who understand currency flows are already positioning themselves ahead of the curve. You're not just buying property in Dubai, you're acquiring FX advantage, asset security, tax optimization, future growth. If you're ready to explore undervalued properties, off-market deals, or simply want to understand how this shift affects your investment plan, directly message me USD, clicking the link in my profile. Let's build your next move together, strategically, securely, and globally.